In this video, I'm going to talk about how to make more money fast. Stay tuned. Hey traders, a very warm welcome to you. So this is a question that comes in quite a lot. It's like, listen, I need to make money fast. I want to make money fast. Is it possible? And my answer is always twofold. The first thing is yes, it is possible. And I'm going to show you in a minute how it is possible. But my other answer is, listen, if you're in trading to make money fast, you've got to admit that you're on the gambling side of things and not the long-term success side of things. You know, money coming quickly to you in trading generally is not synonymous with long-term success. Steady, slow growth, doing the right thing, little bursts of equity growth happen, pullbacks, bursts of equity growth, whatever. However, let's just address this question. Is it possible to make money fast? Yes, it is. However, to do that, you have to increase your risk. It's as simple as that, guys. If you want to make more money, you've got to increase your risk somewhere. So what are your options? Your options are that you increase your position size. So bearing in mind, guys, I'm going to give you some pointers on this, but I'm never going to recommend that you try to make money fast in trading. I always say, listen, if you want to do this, then do it the right way. But if you think, you know what, I'll prepare to take the risk, these are probably the better ways of going about it, in my opinion, although no advice intended. So how would you do it? You take on more risk, because more risk equals more reward potentially. You're not going to make a lot of money if you've got a small position size on, unless you're fortunate enough that the market just goes massively in your favor and you're going to have a really lucky move and it's going to have to make the money that way. If you want to make more money fast, you're going to have to dial up your position size. So when you do that, do you just do it and go and say, well, I was doing £2 a point. If I'm spread betting, now I'm going to do £25 a point. You could do. And the chances of you getting the next trade are going to be relative to how successful you've been previously. If you've got a good hit rate, you might have a good chance of getting that the next 2 or 3 trades, you know, that decent position size relative to what you were doing in decent profit. However, maybe you're better to do this a little bit more of a structured way. Maybe you're better off saying to yourself, hey, let me analyze my last 20 trades, 25 trades, whatever it may be. What are my very best trading strategies? Where's my very best opportunity lie? Where am I good at? Have I got a theme running through these that actually, if I am going to kind of take on more risk and be prepared to take that risk, where will I put that risk? And so you might say to yourself, okay, well, I now want to do 25 per point and I'm going to do it on this specific setup or strategy, or I might do 50 or 100, whatever it may be. Of course, recognizing that you'll stop and obviously the total risk is still going to be there. So if you've got a 100-point stop, risk is going to be whatever your pound per point is, whatever your position size is, whether you're trading Forex, CFD, being aware of that. But let's just pretend we're all big boys here and girls and we understand, you know, the nature of the risk. If you want to take that risk, you wait for the opportunity that really ticks a lot of the boxes. A big mistake people make when they really want to accelerate their money is they say, you know, I'm just going to, next trade is going to be massive. And of course, it undoes all the work and it's psychology damaging. And you've got to be prepared for that as well. This is not a foolproof method by saying I'll wait for the very best strategy to do it, but it takes a little bit of the risk out if you can pinpoint the strategies that are working the very best for you and say, okay, well, that's when I'm going to put my chips in. That's when I'm going to take the risk because I want to make more money fast. That's a slightly better way of doing it. Okay, so that's your first one, guys. The next one is to pyramid into a position. And this has worked. This can work very, very well. So how do you do it? So you've got a trade here, and let's say you identified that this thing is a long for whatever reason. You've done your kind of due diligence and your research, and the market starts to push up. You buy, you know, your first batch kind of here. Let's say you buy at £10 a point for spread betting, or 10 CFDs, or whatever method. What's the word I'm looking for here? Whatever kind of market you're trading and whatever vehicle, that's the word I was looking for, whatever vehicle you're using to trade the market you want, with a CFD, with that spread bet, whether you're going direct to market, whether you're trading spot, whatever, you get the point. So you're trading here, you do the first position, market comes down again. Now this can work when you're in the right environment, and again, you've got to try to pick and choose, but the point is here, you'll add more, you know, pulls back again, you'll add more, pulls back again, you'll add more. And what you're doing is you're pyramiding in. Now, this is nothing new, guys. This is kind of normal strategy, but The point is, if we're kind of putting everything out the window and we're saying, listen, we don't want to make money fast, we're prepared to take some risk on, but we don't want to risk money that we've got in our trading account per se, we can say, okay, let's take this on, let's have my stop, let's have a colored pen to try and differentiate. I've got a red in my pocket. I have, let's say we had our stop here and we're at £10 a point and we've got a 20-point stop, whatever, 20-point risk. Trade goes in our favor. We add another batch on, but we pull our stop up. So in reality, we're not risking it anymore because we're using the profit we've got to kind of pull things up. And then again, we pull the stop up. So our risk is, even though we are still risking the money we have technically, but we're not risking what we had at the beginning, which was point kind of A, if you like. So the £200 risk is still there. We've just maybe made 500, so we're using that, we're adding more, we bring the stop up, we make another 500, we bring the stop up, another 500, Now, of course, the vulnerability of this is that, one kind of pull back against you and it's going to take out all your profits that you've had in that trade. But the point is, if we're talking about making most money possible quickly, if you're in the right environment and you keep pyramiding in, you can then be in with a very big position. By the time you're at, say, add 10, and I'm maybe being an extreme here, very big position, your stop is tight, so you're vulnerable to a pullback. But if it then just, exhausts the upside and you're in kind of £200, £300, £400 a point, whatever it may be, then you're talking a lot more money than you would be if you were kind of just scalping based on your smaller position size. So that's one way of doing it. Now, how often does that work? Not very often, because you've got to have a lot of things lining up for you. You've got to have the market in the right conditions. You've got to have, very good with your stop placement so that you're not adding too soon. You're not tightening up the stop too much, because the likelihood is a little bit of noise is going to ping you out and it's going to keep going. So you've got to really have a lot of luck on your side with this one. But the positive side of this is you are sort of leveraging on profits that you've incrementally made. So your risk is really never more than kind of where you were at the beginning. But of course, you've got to be careful that things don't just gap through your level, or just, there are those hidden risks there. But this is one way of making more money quick. If you can identify you're something that is doing this, and then just add and use the profits of the trade to dial on more risk, and then guess the kind of point where you want to come out of it. It's one way of doing it. So like I say, guys, it's definitely not recommendation or anything like this. It's just an observation, and to say, hey, if this is something you wanted to do and you weren't looking for long-term success and you just kind of wanted to make a bit of money quickly, if I had to do that and I was prepared to take the risk on, those are the two ways I'd do it. Number one, I'd try and find my very best trades and I'd dial up the size just on those. I wouldn't just go next trade very, very big. Or I would try and find a market like this, or wait for a market like this and plan to kind of risk and leverage up and look for the big trade. All right, guys, comments in the comment section below. How would you do it if you wanted to make money really fast in trading? That's it. That's all I've got for you guys. Take care. See you in the next one. Bye-bye.